Hi, everyone. This is Jason Bierk of Wall Street for Main Street. Welcome back for another Wall Street for Main Street podcast interview. Today's special guest is a returning guest, but he hasn't been on in a while. He put out a couple of years ago a book, and I interviewed him about it called The Big Silver Short. The silver price has been going, it's been on a roller coaster. It had an absolutely enormous run, I think, over the last 7 or 8 months. I interviewed Dario from Hong Kong. I think in either late November or early December of last year in 2025, and he was talking about how silver was going to hit $100 an ounce within a couple months. He was right. It blew past $100 an ounce. And then on Friday of last week, we had a flash crash. So I'm going to ask him about that because he covers silver extensively. He's actually been interviewing a lot of the silver miners that have been getting contacted by industrial end users in China and India. He has a lot of excellent interviews up on his YouTube channel. He used to work mainstream finance. He graduated, I think, from the Wharton Business School. I remember having
You didn't
discussions.
have to rub that in. Come on now.
Oh, come on. It's still prestigious. It still looks good on your resume, buddy. Still
Well,
prestigious.
you can ask me once we start, and I know I'm interrupting my own intro, but you can ask me about what I learned from Jeremy Siegel and Keynesian economics. But
Well, it still looks great on your resume. You graduated from the Wharton Business School. You're a professional options trader. You saw that the system was a disaster during the 2008 financial crisis. It just every couple of years it just got worse, Chris. During the pandemic, the last couple of years, I think they're lying. The governments are lying about with stagflate, taxolite, the money supply growth, the amount of inflation, and here we are in a world of what $5,000 an ounce gold. The silver price has corrected, and I'm using air quotes here. It's still above $80, well above $80. And the Asian silver price for physical metal in what China, Hong Kong, Japan, Korea, it's still well above that price. We're recording this interview on Wednesday, February 4th, 2026. Chris Marcus of Arcadia Economics. Thank you for joining me again.
Jason, it's a pleasure to be with you. And I'm thinking back, yeah, that was 2018 or 19 when we did the first one. And remember when I put out that book, I've actually been getting a updated second edition ready, and I looked the date that we put it out. Silver was 1762 that day. So after 20 years, we were right. Go figure, we were due.
Well, at $17, yeah, I remember buying 10-ounce silver bars for below $200 and thinking that I was getting a huge bargain. I was giving them to family members for birthdays or anniversaries or for Christmas or for Christmas. And then they were, they were like, well, what's this? I don't want it. It's not usable. I think they're pretty happy now, though.
Well, I'll bet Mark Dice could still stand out there outside of his pawn shop and end up giving away more Snickers than silver. But yeah, maybe we're getting a bit closer to the point where that changes. And in the background here, you mentioned China and India, and I have a handy spreadsheet, so I'll get you an update on those premiums as well, because certainly that does tell a big part of the story. Especially because once silver goes to $80, once it goes to $100, it's like, well, what do you do then? Because is there a big parabolic hockey stick spike on the chart? Absolutely. Do I think people should at least be asking the question, are we witnessing a bubble? I think you'd be crazy if you're not. Now, with that said, I think there are certainly reasons to support that this isn't just a random bubble that's popped up, and we can dig into those. First of which is that, like you mentioned, with Dario seeing it a couple of months ahead, and then as the price has accelerated, we've seen the spread in Shanghai widen. Remember on Christmas night, I'm sitting there watching silver go through 73, 74, 75. I wake up the next morning and there's a fellow named Vince Lancy, brilliant guy that we're fortunate he does a morning show for us each day. And he's mentioning that silver is at 75 in New York and 82 in China. I'm thinking, oh, okay, that's interesting. Then the rest of that day, as I'm sure Jason, you and many of your listeners remember, that was the day after Christmas, which I believe was the day it finished right under $80. And in case you thought that was stunning, then last week until Friday, we saw it up over 120. Yet each of these times we've actually seen that spread to China, which is where the industrial center that uses the most of the silver that goes into manufactured products. We've seen that spread widen. And actually, what even blew my mind further was 2 weeks ago we saw the spread in India widen out further, which certainly caught my eye because, as I'm guessing many people are aware, but some might not be, that India actually reached an overt shortage back in October. And in case you're saying, well, India. Well, first of all, India is, I mean, depending on how you do the accounting between investment or industrial, I mean, they're number two or three in terms of demand. But the other thing with the shortage in India, that was reported October 8th, and October 9th is the day that I think you could say, in some sense, the LBMA silver market broke because normally you have the futures trade over the spot price. And Jason, I know you have an advanced audience. You can let me know if I need to explain that, or we're not going to go deep into backwardation, but normally futures trades over the spot because of interest and storage. But what we saw that morning, we had seen and it's usually about 20 to 30 cents over, depending on how close to expiration you are. But we had seen that invert in the prior couple of days, and it had been 20 cents under, got to 50 cents under, and then the day after the India shortage was reported, which did include funds that halted taking new additions, those are ETFs that I'm talking about there. That happens, and I might add, we've seen that in China in the past week as well. So basically, you have the problem in India, and then the next day, the spread between New York and London blows out because India was getting the majority of their silver from London, and then they had a problem. The spread got as high as about $3 into backwardation, which I'm trying to. It's about getting struck by lightning 4 or 5 times in the same day, financial market equivalent. I mean, it's unusual to see it go 30 or 50 cents into backwardation. And basically, you saw that London had finally hit the break point in terms of what's available in their free float versus what they're underpinning in the physical market. And what happened after that? Well, to help fix London's problem, we had silver come from the COMEX in New York back over to London after it had gone there earlier this year for tariffs, which I never heard anyone talk about tariffing things that were coming from England. So that's still an open question of why really.
Yeah, I thought that was an excuse. I thought the tariff stuff was an excuse that they were already starting to run out of silver in the at the commodities exchanges in the vaults, that the amount of silver that they had was way lower than the reported amounts and registered in the registered vault. So I thought the tariffs was just an excuse.
Yeah, and I'll admit I do enjoy listening to what some people call conspiracy theories. I think I'm able to put it in context these days because I'd like to hear the different views that are out there. Now, we'll say this is speculation, although I have heard the thesis, well, you had all that metal come over when there wasn't really one of the areas that was talked about being tariffed, and then a couple months later, they put silver on a critical minerals list. Jason, you still have, oh,
Well,
wow.
and China banned silver exports too. What, on January 1st? So yeah, the U.S. it's a tit for tat, right? The U.S. put it on a critical metals list along with rare earths and some other strategic metals, and in China also countered that with an export ban.
Well, one qualification there. I know there's been a lot of things reported. It wasn't an outright ban. They've put more specifications on who specifically is allowed to export and what you have to have done the last couple of years to be able to do that. So, not a ban, although I also think at the same time, what you're saying is important to consider because, all right, that's what they did last month. Who knows what they're going to do this month? And by the way, Jason, we now have matching strategic stockpiles. You have JD Vance. Today I saw, I don't know when these actually happened, but today on Twitter I saw JD Vance. Then Howard Lutnick was out talking about the critical minerals stockpile that they're building, of which silver is included. Jason, I know you've probably fell out of your chair when you heard David Copley, the supply chain czar, say just the U.S. alone plans to spend hundreds, not of millions, but of hundreds of billions in investments in the mining sector. He even referenced doing deals similar to MP Materials. So, yes,
I actually didn't hear that, but it doesn't surprise me. I think I heard President Trump at Davos. I know they've been discussing this. They haven't announced it yet. They're going to they're going to offer like $250 billion of grants for nuclear power too through the Department of Energy. So I don't know if that's going to be the exact number, but they were talking about that for 250 billion with a B for nuclear power. They want to accelerate that too.
Well, I think what you're seeing is that we're getting to the point where, we've hit the end of the road. Jason, I know you've been doing this for a long time, and for years it was like we'd watch silver around $15, gold's getting clobbered, and we're saying, "Hey, watch out, wait one day." But I think we've crossed past a certain point. Perhaps the easiest way to see that is through what we've seen with the rare earth market in the past half year or so, where it's like now we're at the point where if the military wants to go to war against China, we really do have to ask them for the parts and the materials. So that's why I think you're seeing a lot of these things break down. Again, Jason was about to mention before, we're recording on February 4th today, and I think it was February 2nd of last year when Besson came out and said he's going to monetize the assets on the balance sheet for the good of the American people. And I don't know that he's ever fully explained. He said back then it wasn't gold, although there's a fellow named Michael McNair that actually you would like Michael, Jason. One of the smartest people I've ever had on my show, and he laid out his thesis of how the Trump administration has already been, I think he used the word influencing the gold price via the dollar. And again, there's a fellow named Stephen Myron that people may have heard of. He wrote a 41-page thesis titled Hand Guide to Restructuring the Global Trading System. He wrote that back in November of 2024. Didn't put the exact day on it, but right around when Trump was getting elected, Trump gets elected. Then a month later, Trump names Myron as the chairman of the Council of Economic Advisors. Now Myron's in the Fed. And despite
Well,
this idea that Warsh is going to come in and jack up rates like Volcker, which was used to explain last Friday's sell-off, now
yeah,
Trump's guy
sure.
is getting
He's
in
not going to
there.
jack up rates. Trump wants rates lowered. He wants the front end of the curve lowered, at least.
I mean, it's hard to imagine that rates are going to be higher a year from today than they are now. But you're seeing all this stuff come to a head. I mean, think about it like this. If you're working at a foreign central bank or an investment fund outside of the US, separate from who you think's right or wrong between Trump and Powell and the lawsuit and wherever interest rates should be, it looks like a circus.
Yeah, yes.
And then
Well,
you
I mean, the
have
spending is still increasing, right? Trump is like, "Oh, I'm doing a tax cut. Oh, Doge." The goal for Doge was to what, cut 2 trillion of spending. They got maybe 10% of that. Well, let's be generous and say 200 billion. They cut 10%.
I'll take
Now we're
the
seeing all this
under.
fraud. We're seeing announcements that the Pentagon military budget is already increased. I think it was 800 billion before Biden left. Now it's up to around a trillion. They're talking about another 50% increase
Can can
of the.
the can the Pentagon pass an audit before we give them that 50% increase? Is that unreasonable to ask?
They
Can
don't
someone
want to. They
check
don't want
with
to pass
Don
an audit.
Rumsfeld if he found the 2.3 trillion yet? Are these like, you
Oh
know,
boy. Well, Catherine Austin Fitts of Solari Report and Dr. Mark Skidmore think it's way more than that. But yes, that was like 20 something years ago. That was 2001, right? 9/11. So that was 2.3 trillion. That trillion dollars was a lot of money back then. I mean, now it's like almost nothing. That's a couple months, a month or two of government spending.
well, that's the thing. When 2.3 trillion becomes almost nothing, that's one of the reasons why you end up with 89.41 silver price on the COMEX. And let's see, is gold back over 5,000? It
It's
was
right around
earlier
there.
today,
It's right around there.
5,042. And Jason, while we see silver at 89 in New York, let's see what we got in London. We are at over 90, $90.09 in London. Simultaneously, in China, we have silver at 102. Looks like the India premium. I'm not sure if they're back up. I see them at 91. They may not have reopened just yet. But going back to what we were saying earlier, so you have all this stuff come to head, years of deficits, years of watch out, if they cut rates or people start buying silver. We kind of hit that point because you had the metal, for whatever reason, initially went from London to New York earlier in the year. It started coming back over. They also started sending metal from China over to London. And then China, unfortunately, they didn't have a whole ton to begin with. If you ever look at the chart of the Chinese inventories underpinning their market, was already low. They send metal over to stuff out the fire in London, and then China goes into a problem as evidence. And this isn't, here's the best part. If you're listening at home, you don't have to take my opinion for it or trust Jason. The premiums are telling you that. And Jason, you mentioned we can dig into how there's one miner that I talked to that's been getting calls the day after Christmas, trying to buy his production at an $8 to $10 premium. I agree with what Dario's saying. In fact, if you go back about 3 weeks, maybe after silver crossed 100, and in fact, you could go back further. It took 45 years for silver to break 50, and then finally does that, and then the next 2 months it doubles. And I remember thinking as we're watching these Chinese premiums not only persist, but increase, I'm like, wow, are we getting close to the point that I think any silver investor has dreamed of this before? Maybe not in a world
Well,
sense, but
I,
if we go ahead.
I want to add to your points there that I think the average person, the mainstream a generalist trader that only looks at relative strength indicator and overbought, oversold conditions, what they're not understanding is that silver was the only commodity out of all of them that was way below its 1980 inflation adjusted high. And so at the 1980 price, that would have been $49, but that wouldn't have accounted for decades of consumer price index inflation. So silver should be at like $65, $70 base price, way higher. So silver is re-rating based on all the money printing and all the supply demand issues that we've been talking about. Because what for the last 4 years in a row, there's been supply deficits. You add in the macro conditions, what with all this money printing, global M2 is almost the average financial analyst doesn't talk about this. The global money supply, so that's China, Japan, the U.S., European Union, just the 5 or 6 major central banks. It's up to 100 trillion of global M2. The gold and silver price, of course, are going to react to this. They're not going to like the circus in DC. People are going to look at all these things, the military spending, the interest payments on that, and just say, you know what? I don't trust all the numbers that are coming out, the inflation, the DC spending, and they're going to start to hedge, especially U.S. Treasury bonds. I think the main issue here, I've been talking about this since the Russia sanctions, Chris, is that the main macro trade for the last 3 or 4 years was the central banks where we need to hedge away from U.S. Treasury bonds and we need to reserve assets into gold after the Russia sanctions.
Yeah, and think about what you're pointing out there is that we're seeing $5,000 gold, $100, $90 silver, and this is really before we've had an overt debt issue. Now, I think people that listen to your show and you and I, we sit there and think about it all day. But I mean, if you just went to a corporation in the U.S. and pulled people at random and said like, "Hey, any sign you concerned about the Treasury at all?" I'm guessing very few people would be. And I mean, yes, there, we had for some reason, what was it back in December? It's not QE, but we're going to buy bonds anyway. So, there's a case to be made, and there's things unusually going on in the plumbing of the repo and money markets. But I mean, it's not like we've had a Lehman moment, and you still got that debt pile out there, which I remember when Trump said that he was going to give everyone $2,000 checks and repay down the national debt. I'm like, I don't know how that's going to work. And then I was thinking, didn't he say something like that? And then someone reminded me, and sure enough, I think it was 2016. He said back in his first term he was going to pay down the national debt, which, as we know, didn't happen. Now, if you want to increase military spending 50%, doesn't make it seem likely to happen. They actually brought Elon Musk in there to do Doge, and he found plenty of stuff and basically left after they put out the budget, which ignored everything he said. So there's some point where
Well, look, it almost ruined his company, cutting 10% of the target of 2 trillion. So what the stock price was under attack. There were riots in the street that were coordinated protests, similar to the Minnesota stuff. Everyone, Tesla owners, Tesla vehicles were being targeted, and that was just cutting a small amount of the fraction of Doge's target. So it's like people, there's so many people in power, economic and political elites that are addicted to what corporate welfare, government subsidies, waste, fraud, corruption, and abuse from all levels of government spending. It's just sad. It's a kleptocracy. And I think the government, what Trump is saying officially, that inflation's not a problem. There's low oil and low gasoline prices. But on the other hand, I mean, like all the spending programs that are being announced, you said with the commodities, with nuclear power, with data centers, they might, there's rumors they might bail out OpenAI if NVIDIA doesn't want to fund them. Oracle just borrowed like an insane amount of debt. So there's all these spending programs that are being planned. And I'm just scratching my head thinking like, how are we going to pay for all this stuff? They're gonna, with the world reserve currency, Chris, they're going to print the money. I think they're just going to lie about it.
Here's the other thing is that I don't even think, even if there were the political will, that you actually even could cut them and reduce the deficit because what it's been a couple a month or two since I've looked, but I know government spending as a percentage of GDP has been around 24, 25%. So, all right, what's going to happen if you cut some of that spending? Well, GDP is going to go down, and then tax receipts are going to go down. So, yes, I think we passed the point of no return a while ago. What I think is further intriguing, I think it's not just, it's one thing for you or I to say that, or people are talking about gold and silver. I do think within Washington and perhaps even more significantly within the military, they've realized that we've hit the end of this road. So it's not an accident that it's happening now. And Jason, you mentioned things that U.S. government is addicted to. May I pile one more onto that list? I mean, I think, Jason, are we clear yet on where Trump thinks whether interest rates should be higher or lower?
Well, he can only really do the lower end of the yield curve unless they officially announce what
Oh,
some
come on.
type
Let's
of.
not rule out yield curve control. In fact, I've heard they're even already talking about that.
Well, they're doing a tiny amount of it. What, 10 billion here, 20 billion there. I mean, it's not like 100 billion or 200 billion a month though. So it's not like full on debt monetization, yield curve control, financial repression yet. But I think we're headed there. They're doing a small amount of it. So when the interest payments, when the treasury bonds are the interest payments are paid off, they reinvest, the treasury does, back into the long end of the yield curve. But that's not like full debt monetization and yield curve control yet. We're headed there though, I think.
I appreciate that you mentioned the word yet in there. So, I guess vesting in all those miners, I know they say they're going to make a profit on it, and who knows, maybe they will, but um, even with just where we are today, I'm looking at the Fed funds curve, and I find this interesting because March and April, they're pricing in high probability we don't change, which I think is reasonable enough. Yet, what I don't understand is that they still only have two rate cuts as far out as the futures go to December of 2027. So almost still 2 years away. Yet Trump, okay, we know he doesn't like Powell. He thinks he's a loser, an idiot. Again, not going to try and get
Well,
political
Powell's
here,
gone now,
although.
right? So Warsh isn't. Warsh hasn't been confirmed yet, right? The Democrats are trying to hold up the confirmation in the Senate.
But here's the thing: if Warsh is Trump's pick, and did you hear that someone actually asked Trump? We knew he wanted interest rates lower, but did you hear when he actually has said where he thinks how much lower? Did you see that? There wasn't a lot of attention around it. Did
No,
you?
but I'm sure he'd like them as close to zero as possible, right? So he can refinance the debt and go on a bunch of other. He wants what, military upgrades? He wants new ships, Trump class ships. What he wants, these things with laser cannons or rail guns. He wants to go buy. I mean, there were rumors floating around that 500 billion was going to be created out of thin air so he could outright buy Greenland. So
Well, I mean, I think that shows you why gold in particular, silver to a degree too, different profiles in a sense, yet it's like we're this late in the game, and instead of getting that Fort Knox audit, we're getting the plans you're talking about. And to answer the question I asked you, and your answer did fit in the correct category, He said, I think it was back in December maybe, that he thinks rates should be 1% or lower. And he also just picked, I know there's some dispute of whether people are, some of the people who have to approve the Fed pick are upset with the lawsuit threat against Powell. Yet, if Warsh gets in and Trump picked him, and Trump has said, he's not just said, he's gone out of everything. Maybe he did put up billboard displays in Times Square. I mean, he's gone left, right, and center saying rates should be lower. When we find out how much, he says 1% or lower. And I'm looking at this futures curve that just says 3 to 3.25 all the way out to 2027. And it's similar to what we're saying about we're seeing these gold and silver prices before anything's happened with the debt. What happens if over the summer Warsh is in there and basically is telegraphing to John Hilsenrath and what's the other Nick Timmerhouse, his replacement? What if it's like clear that hey, Warsh is actually going to take rates down to 1% over whatever time period? For not just, I mean, it's not like we're at 1.5 now. We're at 3.5 now. If we're sitting here in June and July, and it's basically the world is realizing, oh yeah, they were serious. I mean, what happens then?
I'd
So
say gold will be clearly the number one, not necessarily the world reserve currency, but the number one re-rating of gold as the world's number one reserve asset, way above U.S. Treasury bonds. And I think that's already happening, Chris. But it could accelerate. So we could see six, seven, maybe even $8,000 an ounce gold faster than people think, because the central banks I think there was Singapore central bank sold a little bit of gold, but all the other ones on the officially and unofficially, because the CEO of Scottsdale Mint said he went on a tour of Europe, and he said unofficially, like a lot of the central banks are buying a lot of gold in the over the counter market. They don't want to declare their purchase publicly. These central banks are looking at gold as a hedge versus U.S. Treasury bonds as a reserve asset.
I mean, you should listen to what the guy from Poland says. I mean, it sounds like he's sitting there listening to your show each day, he's saying the exact same things. And I think their target last year they sent it set at 20%, and then they decided to go for two after hitting the touchdown there. And now I think they're up to 27%. They just had another
You mean
edition,
if
but
there was total reserves, you mean?
yeah. So
And some of them had gold at zero or way below 10%. So, I mean, we're starting to get a re-rating here. They're allocating to gold. And I've just, this is the funniest thing to me, Chris. Like, I don't know if you track some of these professional traders that all they do is charts. And I went back and looked through some of their predictions in like 2024, 2025, and they're patting themselves on the back that I called the exact top on gold and silver. It's crashing now. You can short it. You're going to make a lot of money. They don't bring up any of the fundamentals you said. They don't bring up that silver was the only commodity nowhere near its 1980 inflation adjusted high for many, many years. It was way below $49. After you add in CPI, it's going to have to be way above $49 at some point, considering the supply and demand fundamentals and how industrial demand grow. But some of these people, like, they were calling tops. And there was one technical trader. She was on Jim Cramer Mad Money TV in the last couple days, her charts, and she was interviewed. I got in a social media fight with her 7 or 8 months ago. She called an all-time top of gold at 3,000, said it would never go above that. She was calling gold tops at 3,000, 3,500, 4,000, 4,500. And no one's checking the track record of these people. They've just been, calling tops all the way up for gold and silver, and now they're patting themselves on the back that they call the blow off top, and you're going to make a ton of money shorting. I don't think they understand anything that's actually happening with the system.
well, it's certainly a fascinating environment where, silver goes up a bit, and then all of a sudden we had 50-year silver experts out there that I'd never heard of before, and that's okay. And in some ways, I think if people have the right framework where, if you go on Twitter or wherever you find your news, I seem to gravitate to Twitter, although I'm weeding myself off of that. I mean, there's a lot of stuff that I don't think is necessarily factual, but you get a wide range of things. And if you have the ability to verify and filter, I think that goes a long way. So with that said, I mean, well, you can find people who say silver's a bubble and people who say it's going to 1,000 tomorrow. So probably the answer is somewhere in between there.
Well, but it's not
And
going back to $15 though, because I mean, no one can make money off of it because with the supply and demand of the market, right? So I mean, like the days of what 15, 20, $25 an ounce silver, maybe there was a flash crash what last Friday, silver went down substantially, but I mean the days of like there's people saying that silver is going to go below 30, it's back to 20. I mean, I'm seeing some of these technical traders say like the crash in silver is not over, it's going to cascade and get worse. And I'm just thinking to myself, the Silver Institute has been putting out the best research in the industry, what for years now. They've been saying huge deficits for 4 years. At some point, for the last 5 years, it didn't really matter that much. Those deficits. At some point, it was going to matter as accumulator, right? To a point, it took a while. It was a tipping point of accumulation of those silver deficits to where you had an overwhelming amount of what industrial demand, investment demand versus how little extra new supply came online.
Jason, I would say that if silver went down to $15, which I think is incredibly, can you say something's impossible? I mean, it's close to impossible. But let's say that it did actually go down to $15. For any silver investor that didn't have a heart attack while that happened, in some ways, I mean, that could be the greatest thing I could imagine that would happen to the price. Because I mean, if you already have companies basically front running each other throughout India and China, and I can't say how widespread that is, but I've certainly heard from some, and I'm sure there's a lot of groups out there that are doing things that don't, sit there and call me and tell me about it. And we saw already on that flash crash you mentioned, the bullion dealers have been getting swarmed ever since then. And I'm also wondering if you're in India and China, and let's say you have a 200 million dollar plant that makes solar panels, which sits there idle if you don't have your silver. And if you were willing to pay when New York was at 120, I think China got up to 130 or 140. I don't remember the absolute peak, but if you're sitting there and there's already a scramble for the metal, which that part is documented. I've seen it. I know you've mentioned parts of it. Dario mentioned the sources he's seen. That stuff is out there. So if they were scrambling to pay those premiums and calling small Latin American silver producers, I'm not talking about like they look up First Majestic in the phone book. I'm talking about smaller companies to the degree I asked the guy I spoke with. I'm like, assuming that they made other calls, this wasn't just you. And he said yes. So if you were worried about it there and the price drops now, well, how do you think that the purchasing manager is going to respond? I mean, okay, maybe there's some out there like, it's a bubble. I'll wait till it drops back down to 50. Although I would guess if basically you either have silver or you have a problem, which I think is fair to describe the case for a manufacturer like that, man, I would think there'd be some of them that'd be really rushing to buy everything you could get. And if silver went to $15, I think you would have the historic buying panic of our lifetime. Although you could say we're already in the historic buying panic of our lifetime. I had Stephen Gleason from Money Metals. It's an online bullion dealer, and I know that there's some of the bullion dealers out there that pump information that isn't necessarily true. I find Stefan to be one of the genuine ones. And even before the flash crash, he had given an interview about a week ago saying that we'd exceeded COVID levels, which I think you and most of your listeners remember were pretty extreme. That was before the flash crash. And then I talked to him on Tuesday of this week, and he said that they had a surge in buying after the flash crash. So yes, this stuff all factors in. I mean, it's one thing if you're just sitting there holding your silver, you watch
That's retail. That's retail buying because there's also some retail selling. Now, people do need the cash because they lost their job or they have bills to pay. There are some people selling silver, but that's retail investors. But there's a lot of industrial demand, as you said. Why do you think if you're an industrial end user in China or India, why are you contacting a silver miner? Are they worried that they COMEX, LBMA that they're not going to get delivery of the futures contract, that it's going to be delayed? Why aren't they going to the metals exchanges, the main ones, or to a refiner then? Why are they contacting the miners?
Well, that's a great question. And actually, it looks like to some degree they're doing both. I mean, I've wondered, okay, we have all this metal that went over to the COMEX, and I know people often say, well, the COMEX is going to force majeure, which could well happen at some point, although just to be clear, at least as of today and what's on the report, and if you don't believe the report, it's okay, just in terms of what they are showing, we have aside from when we hit the peak a couple months ago, but because of everything that came over last year, we're still, aside from last year's peak, historically, this is the most that's ever been in there. Yet we've seen metal come out ever since the thing I referenced back on October 9th, the day after India had a shortage, and then London got their teeth kicked in. We have seen silver. It's almost like a V shape, upside down V shape. Silver had been going in, and then right then starts coming out. That's actually accelerated over the past few weeks. And I had wondered, it's like, well, if they're paying a $10 premium in China, why wouldn't they just take whatever they get from the COMEX? I think that's happening. At the same time, it's fascinating because you have this dynamic we talked about earlier between now China and the US are both stockpiling strategic minerals, and I think it's clear they're not really playing in the sandbox together too nicely. So it's like, man, if there was ever a time when Trump and Besant wouldn't be like, China, you need 100 million ounces here. We got it in the COMEX. Take it. Don't worry about when you repay it. I mean, I don't think we're in that environment. And Jason, you're quite right when you say, was that just retail? Yes, Stefan was talking about retail, although what is quite fascinating, would you believe, Jason, that on February 2nd, just the following day after the previous Friday flash crash, that we saw either the second or third largest single day addition to the silver ETFs in the history of silver ETFs.
Flash crash in the second with the second ETFs, and then what the Vince just put out an article too that your website also had in Scottsdale Mint about what a UBS fund that blew up. And I was speaking with someone in Switzerland, and he said that UBS had a crypto fund, a Bitcoin or crypto fund that also blew up, and they're panicking about that. And we know that they were forced to, it was a shotgun wedding. They were forced to merge with Credit Suisse, and that was probably papered over. So they probably have a bunch of bad private credit, commercial real estate. Sounds like their Bitcoin and crypto blew up. So there's just a lot of rumors going around that UBS China has a fund that blew up recently too.
Yeah, there's not rumors that I don't know if it fully blew up, but even prior to what happened on last Friday, where we did have, I've seen reports of two ETFs, or one was an ETF. I'm not sure how you describe the other one. It may have been an ETF, but basically ran into problems where the net asset value of the fund diverged from the price. Although even prior to that, the one of the Chinese ETFs had also had a halt in they reached a halt where if you called up and wanted to buy some more shares, they couldn't add it. And I remember that well because when that happened, of course, it reminds me of, hey, wait, we've seen this before. Where did we see it? We saw it in India on October 8th, the day before things blew up in London the next day. So I'm not surprised that a fund would run into trouble. I'm sure there's plenty of margin calls that have been getting issued because as the price has been going up, the margin has been getting jacked. I mean, and I know hopefully I'll phrase this the right way. I know people get upset, say like the CME this or that, or why are they doing this? It isn't fair. And I think there could be a great argument there that I wouldn't necessarily disagree with. Yet, Jason, you remember back in the old days, all I was saying, oh, the bank's this, silver manipulation, this and that, which I do think changed somewhat. It didn't seem as regular and extreme post JP Morgan $920 million fine. Now, with that said, when you see some of the
didn't some of the bullion banks over the last like 18, 24 months, didn't a lot of them close out their shorts and get long? And there's only one or two large banks that have the short position now. Was it Bank of America or another one? So some of the banks over the last like couple of years, they realized, the DC spending, the gold was being revalued as a reserve asset. A lot of central banks were hedging. They realized that it was not advantageous for them to be heavily short gold and silver anymore, and they started changing their structure of their futures contracts. So I think what JP Morgan, are they long silver now and it's another bank that's heavily short?
Well, here's the interesting thing about that, because if you look at the silver COT, and I'll just double check to see what's happened the last week, the net bank short position has been decreasing quite a bit. And okay, yeah, down to they had set a new record for largest short position in 2025. I think it was 54,000 contracts, and they're down to 23,000. Now, with that said, something that I didn't quite get, although, and I'm not saying, well, let's say maybe the truth lies somewhere in between here and there. Although in the past year, let's say, I actually talked with someone who used to run a gold and silver desk for one of the bullion banks. I'm going to leave nameless, but it's one that you would know. And he told me it's like when people are looking at the short position on the COMEX, they're taking it completely out of context. And I would say this applied to, if we talked about this a couple of years ago, if this is a mistake, I was making it too. So I'm not saying it critically, but just trying to make it as clear as possible. He said that what happens is that the bank takes the offtake agreement from the miner, and when they have that long position, the time between when the delivery is made, that is when the short position is added as the hedge on the COMEX. And according to him, that unless someone on a prop desk is taking a position, it's extremely rare that the bullion bank would have a directional exposure. Now, I will say I've talked with this person quite a bit. I don't think he's bullshitting me. I don't think he's making that up. And I also factor in he was working on one of these desks. I wasn't. So now could the maybe be 80% of the truth or somewhere in between? Um, but I guess that's the thing when I see, and I've seen a lot of people saying that Bank of America has this big short position, JP Morgan. There's very little. I mean, yes, you can see the deliveries that are made daily on the COMEX, but in terms of their full position, let alone their full COMEX position with whatever is offsetting that, there's very little public information about that, to the degree that I remember when I was seeing that a couple of weeks ago, I actually checked back in with the guy. I'm like, hey, I remember it's been a year or two since I, sit there and check it every day, but did something change where, and according to him, he thought that was complete fantasy. What some of the stuff that goes on out there, I don't know, maybe someone has figured out their true position, although if someone has and can support that, I would love to see it. And again, I'm not trying to be critical of anyone, just I get it. People are excited about silver. And certainly I talked about the bank short position for a long time. And now what's interesting is that you can see the correlation between when the position by the banks, the net collective position, when they were long or short, was a pretty darn reliable indicator of what was happening with the price for a while. Although, just in the sake of accuracy, I will point out that and I'm pulling this up to make sure I'm giving to you correctly. Yeah, when the banks hit their all-time record net most short position of about 54,000 contracts, which was back in last July, so about 6, 7 months ago. That was when silver was just under $40. So while they've been short, the price has soared. And again, when I see, I'm not looking at the margin account of the bank. So I'm not saying that I know, but when I know around New Year's, there was a thing going around, which pretty sure it came from Asian AI guy that I'm not going to comment on that a lot, except I think I actually know who's putting those out there. And also each video contains some secret press release that somehow nobody else on the planet has except for this guy. He gets Samsung's inner memos, the plunge protection team when they have a meeting, he finds out. So I don't trust that stuff that's coming from there. Although one of the things, the stories that was passed around by even some really reputable people was that a bank had failed right around New Year's. Some people were saying, well, that's because of their silver position. I don't know. Maybe there's a bank that
Probably
failed that
not. I mean,
week.
there's so many credit bubbles, Chris, out there with private credit and commercial real estate. I mean, like there was tons, there was a lot of people, myself included, that thought there was going to be more failures after Silicon Valley Bank a couple of years ago, but they did a ton of crazy emergency liquidity programs with the BTFP. There was around $2 trillion of loans in the FHB program. They stuffed that. The real estate developers that were commercial real estate ones, they got extra hidden funding in a congressional bills to convert the commercial real estate buildings, some into residential high-end condos. So Congress just plays these games. DC just plays these games, extend and pretend bailouts. They basically papered over or at least delayed for the last 3 or 4 years a lot of the commercial real estate bubble. But there's tons of these other credit bubbles. As a gold and silver investor, I can't tell you which ones are going to allow bank failures because I think the people in power, they didn't learn the correct lessons from Lehman Brothers. You mentioned Lehman Brothers. I think what they learned is that they don't want another Lehman Brothers. They'd rather just, extend and pretend and print the money and then lie about it. And then most of the people in Americans won't even figure out that there's actually any inflation. They'll believe the government economic data or they'll go and blame capitalism and then government will get more power.
Well, sadly, I think you're likely right about that. And I mean, I think that's the big challenge with a lot of these things that we see happening. I think it was before we hit the record button where we were talking about how people used to always say like, well, be careful what you wish for if you have $50 silver or soaring gold or people used to say $50 silver and then now if you had $100 silver, what is the world going to look like that we're in? And I mean, I guess the way I look at it, like, yeah, I wish I grew up in a world that hadn't led me to think, gee, I might need to do something. This dollar management that, blew up during the subprime bubble isn't looking so good. And you could make the argument that we're already in a world that, I think part of the challenge, and I say this as someone who took a couple decades to get this, but yes, there is a lot of heavy stuff going on in the world. Although George Bush and Janet Yellen, they're not in my kitchen, so they may do this or that. Yet I think there's something to be said for, appreciating, hey, I'm here having a fun conversation with you and focusing on what's actually right in front of us. Yet, in terms of that, what kind of world will we live in? Well, I mean, we did just see a political assassination a couple of months ago, and I would, at least based on what I've seen, hard for me to see that we're seeing a legitimate investigation. Jason, here's another stunner. Maybe you can explain this one to me. I was thinking after Trump got shot at, not once but twice, but we'll just stick with the first one, where there were a lot of things from the Secret Service that were difficult to like say you would feel comfortable betting money on their side of the story. I was thinking we'd hear more. I figured the day one when he came in there, he'd have a head full of steam ready to get to the bottom of that. That didn't happen. But I mean, we see what's happening in Minnesota, where it seems like a lot of money is gone and seems like the government there is more interested in protecting the people who took the money rather than finding out about it. And I also mentioned to you earlier, remember, it was maybe last week or two, I'm flipping through Twitter again, and maybe that's the problem. But in either case, like I'm seeing these videos, and it's like one of those surreal moments where you're seeing what's going on in Minnesota. There's people rioting and protesting. There's smoke bombs going off. Then there's other
And
guys
30 billion
dressed
or
like.
yeah, and 30 billion or more stolen funds just in Minnesota. They're saying 50% of the government budget, Chris. That's insane. Was stolen and wasted.
So we're seeing a lot of the things that when you and I were talking about this a decade ago, and people were like, "Well, it's okay, but you probably wouldn't want to live in the $100 silver world." I think I'm glad that I'm still alive, and I hope everybody else listening is still okay with living in this world. But there's some heavy stuff happening now And it's and I think that's a scary thing. Not like this is a shock, but I don't know. I've been a finance nerd for far too long. So when I think of
What worries me
politics,
now is a lack of free markets now. So, and Congress and taxpayers aren't even getting any vote in a lot of the stuff, Chris. So you have what Argentina, Israel, Intel Corporation, a lot of these entities, pardons are up for sale from both political parties. The guy from Binance got pardoned out. He's out of prison. And then Binance launches gold and silver's futures contracts. Now, I had someone pushing back against me saying that the trading volume, the official Binance trading volume when they launched gold and silver futures contracts was low. But can you really trust the data? I mean, like, there's a lot of corruption there. The stuff out there about Binance, one of the co founders, supposedly, because his ex girlfriend that he was supposed to marry is now like a willing to testify and posting all this stuff. I don't know if you saw that on social media because like she's kind of jilted, but she said she has all this evidence that the guy, her ex boyfriend, paid $75 million to stay out of prison. And so, like, and then there's all this other evidence about Binance. So, and it's just unbelievably corrupt. But I want to ask you as we wrap up here, Chris,
actually,
about
Jason, could I just make one
sure,
comment on that?
sure.
I mean, you mentioned rightfully so lack of free markets. Although, again, what I was getting at before, I hadn't thought of this as much probably as I should have in my life. But it's almost seeing like a lack of integral justice system with integrity. You mentioned some guys able to pay 75 million to get out of jail. That's that's another thing that I don't think people think about. I know I didn't think about a lot for a long time, but when you see, we don't have to get into, and I don't know if, I guess this is going on YouTube. I won't mention the name of some guy who was has files that are being released, and it seems like now maybe there's some effort to get more to the bottom of it, but it certainly seems, at least from what I've seen, that there's a lot more than just Jeff going around doing these things, and certainly seems like a lot of other people and applications were involved. And yeah, I think all that stuff, years ago we were just talking about it, but now it's like, why is gold and silver rising? Well, I'd say, Jason, it's for the same reason that you and I and all of your listeners have been saying to people for years. Just now it's mattering. Why took
Well, you
till
have the accumulation of the macro because I think post 2008, basically the system collapsed. They went more or less to a Ponzi scheme with money printing and bailouts and papering everything over. And it took many, many trillions on a lot of inflation. European Central Bank got a ton of bailouts from the Federal Reserve Bank with currency swaps. They had negative interest rates for 18 months. These currency pegs, they flooded the system with many trillions over the last, 17 years. So it's accumulation of stuff. And then for silver, Chris, and this is what I wanted to wrap up on, I wanted to ask you about what the Silver Institute, the supply and demand for silver, because we just have people saying the industrial, I have people saying that we're making up these lies, that there are no industrial end users willing to pay a premium for this stuff. There's plenty of silver out there because I could go to my coin dealer. I can't sell any silver, so no one's going to pay a premium. I don't think they understand the difference between the retail silver market and if you're an industrial end user and what you need 1,000 ounce bars and you need them a certain way, or you need a certain amount of guaranteed supply each month or every month or two or something like that. It's very different than the retail investor who has what all of his silver and then he just lost his job and he needs to sell what a couple 100 ounces of silver or something like that.
Yeah, well, it's a great point, which I'm glad you brought up, because that is a can be at times a confusing distinction, and this is most certainly one of those times. So to address what you said first there, some people are saying it's a bubble. There's no issues with silver. I would dispute that and be willing to bet against that. I mean, and again, it's not a subjective matter. The premium in China is evidence number one. And I would suggest, when if you're listening at home, when and you hear someone say like, "Oh, this is just a bubble," which by all means, could the price come down? Well, we found out Friday that it sure can, but I would be surprised if anyone who's just saying silver is a bubble has, I'd be surprised or at least curious if they have factored in the increased premium. And unless, I mean, David Stein from Kuya Silver, who I've known for about 5 years, came on my show, described the sequence of phone calls he received and people who were groups, one of which I believe is going to their mine in Peru to look at the operation. So I don't think David was lying and making that up. So, and actually, before we get to the retail, one other important point. He got the first two calls from a group in China. And then the following Sunday night, I brought him on the show. This was after Christmas when markets were opening. They shot up to 84. And apparently, someone from India was watching because he got a call the next day. Similar group from India, solar panel manufacturer that was also trying to pay the $8 to $10 premium. I said, David, could you check back with this guy? Is it just that, they're seeing what's happening with China and they're trying to be proactive, or are they worried they're getting close to a shortage, which I think would be at the top of their mind since they just had one a couple months earlier? And he talks to the guy, gets back, and the guy told him, this is the group from India. Solar panel manufacturer said right now China is taking so much of the silver that we're starting to have a hard time get the raw materials we need. And then a few weeks after that happened, we saw silver premiums, which had been close to flat, not really elevated, jumped to about almost $20 in the span of 2 weeks. So if someone says that there are not legitimate physical issues, I would dispute that. But in
Well,
terms
most of the
of,
people that are disputing that, let me add to your points there, Chris, they don't own any gold or silver. Some of them are saying they do. I don't think they actually own any metal. I think they missed the boat. They missed the run up the last couple years. They totally missed it. And now they're trying to profit from shorting it. So that's my humble opinion. And some of them have, as we discussed a few minutes ago, some of them have been calling tops for the last 12, 18, 24 months. There's interviews of some of these chart people out there that called a blow off top in gold at 3,000. They don't understand what's happening. They've been calling tops on gold all the way up the last 12, 18, 24 months. Every $500 move is a blow off top. Finally, it's going to collapse. They don't understand what the central bankers are telling you, that look, they don't want to own a lot more US Treasury bonds. That's the main thing here, is that gold is being re-rated from a macro condition perspective as the reserve asset, the number one reserve asset. So what if gold goes to what, 7 or 8,000 or higher in the next couple of years? What it will eventually, on market cap, it'll be the number one world reserve asset.
well, I know exactly what you mean. And Jason, I would say that's why I think what you're doing is more important than ever because, yeah, there's also a degree. You can say lots of stuff on Twitter and social media, and maybe no one's heard of you before. And it's like, just remember people say stuff. We're also in an environment where people say lots of stuff that's difficult to believe. So I think it's good that there's information out there. The real challenge these days, in my opinion, is effectively filtering that. Now, if you can learn to do that, I will, Jason, despite all the dark, gloomy stuff we've talked about, I am going to end this on a positive note. And we'll get to that in a second. Although, just to answer what you asked about the division between retail and institutional, now, if you're just looking at the retail market right now, you see a much different story because I think when Stefan came on the other day, I think if you were selling physical silver, not on an institutional level, but you had a monster box of, well, we'll leave Eagles aside, but if you just had 10 ounce or bars or 1 ounce rounds or whatever it is, probably if you get $10 under spot. Amazingly, that's probably good right now because what's happened is that, and you mentioned this earlier, over the past couple of years, there has been, especially once silver crossed 30, there's been a lot of selling on the retail level. Now, and it's also been interesting because I thought, oh, well, maybe it's, all those people who, bought silver and were waiting to close out at a profit. Yet all the dealers I talk to seem to consistently say it's usually someone inherited the silver or they need to buy a house or pay for an expense. Not as much people saying like, hey, I'm tired of holding it. But in either case, there's been a lot of silver selling. And now it's in the last month or so, the buying has really picked up. So now there's just a lot of volume on both sides. But the silver that's getting sold back has been creating a backlog because there's only two LBMA approved refineries in the US that process silver. One of them recently stopped processing silver. So the dealers are getting stuck with all this silver that they can't get refined. Now, a lot of what was getting refined was actually being melted down into industrial bars and getting shipped over to China. So that's helped their market over there. Yet you've created a backlog here where you have silver sitting in one place. And Jason, it's actually fascinating because I asked Stefan about this the other day. I'm like, how come someone doesn't start round this up, get it on a boat, get it over to China? And if we're talking $10 under in the US and $10 over or more in China, and that's a spread wide enough as John Madden and what was it, Madden 95 or whichever year I was still playing video games. That hole's big enough you could drive a truck through it.
I mean, the actual spread might be between $30 and $50. So if it's $10 below spot here in the US, if you're selling back a 10-ounce bar at like 75 and it's selling for 110, 120 or higher in China or India, I mean, that's enormous profit potential, like you said. But then you have to coordinate the logistics. You either have to have Brinks armored trucks, you have to have armed security, you have to charter a cargo plane, or you have to have a boat and a train. You have to have all these logistics and insurance and armed security guards or armored trucks. You have to have all these things planned. So you can't just do it willy-nilly or you're going to lose money doing it.
I'm not saying it's, a matter of you and I, we're going to go down to one of those like mountain biking stores and buy a canoe and like get our pile of
The
silver
canoe might
and
sink if we loaded it with
start
bars.
sailing. Although I will say that I remember when we had the spread blowout in London, I talked with someone that I trust on these matters, and he said, I forget the exact amounts, but it was less than $1 even by sea or air. I think both were even less than 50 cents to get metal from New York to London. So there is a cost, but if it's less than 50 cents or $1 to get it from New York to London, I'm guessing it's less than $20 or $30 to get it from somewhere in the US to China. And actually, I guess here's the capper to that. Stefan revealed there are conversations like this already taking place, which is what I thought was fascinating. And I guess the last thing, if I may add to that, is that basically in the last couple of weeks, I went from wondering if we were nearing the point where manufacturers start front running each other just to get whatever's available, similar to that. What if Apple or Samsung can't get what they need? I've gone from wondering if we're reaching that point to now wondering if we didn't cross that point somewhere in the past 3 months, because now that we've talked about this for an hour and you have the full picture, I don't really know how else you could explain the move that we've just seen after it took 45 years to break 50 and then went up to 120 in the following 2.5 months. I think that's the evidence that we've seen something like a break point there. And
Well, now we get to the supply and demand of silver rather than just the macro that we spent a lot of time discussing, because now I think it didn't matter for many years, Chris, with what the Silver Institute was saying, because people would say, look, I see that there's a silver deficit. I see that industrial demand is growing, that people are accumulating more silver, but the price isn't responding. But look, now what we have 4 full years of huge supply deficits, according to the Silver Institute, right there in your reports. And now the next annual report for 2025, it's not going to come out, till March or April. But I've seen the projections, and it's at least, they have estimates between 95 million and 120 million ounce deficit. So it would be a 5th straight year of supply deficits. It was going to matter. And then when the silver price was that low for so long, Chris, you mentioned $15. No one made any money. You had Coeur d'Alene, you had Hecla. They all bought gold mines just to survive. They had to. They needed the profit margins. They had to go buy a gold mine. They couldn't mine silver really at a profit. They had to go buy a gold mine. Otherwise, they would have went bankrupt. So that was like a lot of the bear market. The average person who's saying the silver bull market's over, it's an all-time top, it's going to crash. There's no people paying premiums. There's no usage. Plenty of supplies coming out. They don't understand how bad the bear market was. This was over a decade. basically of the silver miners just getting absolutely, pounded, hit it over the head with a hammer. Every time it was a rally, it just got hammered again, back down. So there was no incentive whatsoever to bring on new supply. The supply response. What maybe some of these silver mines, like First Majestic Silver, Pan American, they can increase the silver supply a little bit at a mill or one of the existing mines, but to bring on a new silver mine, what that could take years, right?
Yeah. In fact, David Copley, the guy who was saying that the U.S. government's going to spend hundreds of billions of dollars, he actually referenced that in his speech. So, yes, you're quite correct. I actually interviewed Jim McDonald from Kootenay Silver yesterday, which is a company that's actually advancing projects and has projects that can get turned on at the higher silver price. And I was like, okay, but when do you think we might see production? He's like, well, in a good case, like 4 or 5 years. So, Jason, I will commend you and spike the football for the great touchdown you just scored there. Although I'd like to go for two on this one because the numbers are even more extreme than what you mentioned. Because Silver Institute last year we had it was about a 200 million ounce deficit in their headline number. And this year it came down largely because they had a lower number for solar because, well, the solar is increasing. There has been a lot of thrifting going on. There was a Bloomberg article a few weeks ago about two companies that are even looking at substituting copper. So as the price has gone up, they have been focused a lot on thrifting. So at least as of their November forecast, they had it coming, the deficit coming down from 200 this year or last year, or I guess in 2024. And then in 2025, they were forecasting it down to 95. But what people should be aware of is that the way Silver Institute reports, that's kind of like their headline deficit number, which does not include the ETFs. Now, if you include the ETFs, all of a sudden that 95 jumped to, I think it was 295 or somewhere around 300 million. And the reason they break that out is that, the ETFs tend to be a little bit price dependent. So, and we've seen a lot of metal go in during the rally. Now, if the ETFs all of a sudden turned around and became sellers, then, but the only problem is, like I mentioned 2 days ago, the first trading day after the crash, they just had, and I believe it was the second largest addition in the history of silver ETFs that beat out the one from earlier in January, which was the second highest until the one we had 2 days ago. So that number is even bigger when you account for the ETFs. And
Well, that
now
that assumes that the metal's in the SLV, right? So for the Sprott Physical Silver Trust, they have more audits. The SLV, what the custodians, the authorized purchasers, they can take the silver out, and they could have already used the silver for another order. So if there was that $30 an ounce, $50 an ounce premium, they could have rated the SLV and done some of that arbitrage, with the cargo planes and some of the other stuff. They could have, the bullion banks can handle those types of logistics. The SLV is not being audited. I think I saw that there was a physical silver trust in China, Chris, and I think it was trading at an absolutely insanely high premium. Now here in the United States or Canada,
I think that was the UBS one that ran into trouble because
oh really?
I think
Okay,
so.
so it was being mismanaged because normally, like if that was the Sprott Physical Silver Trust, and if it was trading at a huge premium to net asset value, they would sell more units and go and buy more metal to try to get the premium down. So it wasn't like exorbitantly high, but they would say, "Well, we're just going to add more metal because we don't want our units trading at an insanely high premium. We want to accumulate more metal."
And that speaks to exactly what you were saying before about there's if someone says there's no signs of any tightness in China, I just flat out disagree with that. If you want to say, well, maybe there's signs, but for this reasons X, Y, and Z, I think it's going to come down lower, then I'd be interested to hear it. But if someone's saying there's no evidence of that, and Jason, everything you just described, well, until a week ago, this was before we found out that now China and US are going head to head in building their strategic stockpiles. Now, again, to be clear, that's other metals, not just silver, but silver is included in that. So, yeah, this
Well,
is
and the U.S. Mint, what they can't get sourcing. Is that a refiner problem with the bottleneck that the U.S. Mint is having issues sourcing silver?
that was a mismanagement problem. I would not read, and that's another thing that I talked with a couple dealers about. I would say it'd be incorrect to see the the that it was a I think it was a numismatic coin that they were when silver was around 100. They're like, oops, we got to raise it to 180. But I would not I would not and that's the perfect example where it's like there's a tendency like then anything happens in silver and like people are like, look there's the smoking gun, which I think that's what is important to be careful about. And no, the thing with the U.S. Mint is not uh, necessarily because of the silver supply. There's plenty of issues because of the silver supply. I just would not put that one in there. So
Another important point is that China and India, they don't have a lot of domestic silver mining. So China has a few silver mines, but and India has a few. They have to import a lot of it. So they're importing from Africa, they're importing from Latin America or Canada. So they're looking to diversify their supply. And if the US is also starting to stockpile, that's going to put a huge strain on the existing supply and to bring on new supply, especially a new silver mine, because like silver is normally a byproduct. I mean, that could take, depending on the country, it could take way more than the 4 or 5 year estimate. And what that's a small mine. So probably the estimate the guy gave you for 4 or 5 years, that's probably a small mine. That's not a large mine like La Navidad for Pan American Silver. So if Pan American Silver wants to build out the La Navidad silver mine, which is I think 30 million ounces a year of silver production and over 500 million ounces of reserves, that's going to take a long time to build.
yeah, it's going to take time to get the silver online. One note, China is number two according to Silver Institute. We have Mexico in 2024 came in at 185.7. China number two at 110.1 million ounces. Peru at number three at 108. And then you have a bit of a drop off to Bolivia, Chile, Poland, and Russia at about 40 million in the 40s. So China is a big producer, but obviously they're also the largest consumer. And again, it's fascinating the way that we're seeing the markets bifurcate, where depending on where you're looking, there's a completely different silver price. I would say that's another one of the key symptoms of not only things breaking down, but again, of tightness. And Jason, I know I promised I would end on a positive note for all of your fans and listeners where is there heavy stuff going on in the world? Absolutely. I'm not going to sit here and try and kumbaya over that. Although, at least in terms of the finances, somewhere after I heard that David Copley speech where he was saying hundreds of billions, I had a couple miners on and I remember I thought it was 100, he said hundreds of millions. Then when I heard it again, I'm like, the guy I was talking to was Sean from Dolly Varden. I'm like, Sean, did he just say hundreds of billions? And I think it was that day. I was a little bit later. I've been walking to get ready to take a shower, and it was one of those light bulb moments where it's like, "Whoa, wait a second!" Before you put on the next podcast or get distracted with something else, I'm like, "Wait, this." And it's intriguing because since it's government, they legally have to telegraph it. So I would say that all the people who've been listening to you and the great guests that you have on there that I've appreciated and learned from and all this stuff that, you've heard for years, well, one day we're seeing it happen now. And yes, is there things that are not ideal about it? Absolutely. But within that, remember when I had that light bulb moment, it's like, wow, if I like given what we're seeing happen, the way these things and all this stuff that we've studied, there is I'm not saying for everyone or that anybody should act on this, but just in my own thought process, it was a feeling unlike I had ever had before, where it's like, well, if I make some good decisions going forward here, this is an incredible environment to really, have a big impact in your life and your savings and what you do with what you have. Obviously a lot to digest, and I'm not saying it's you're going to listen to one podcast and then you're Warren Buffett the next day, but if you can filter through this stuff that's happening, if you can hear things, verify, also form your own opinion and develop relationships with people you trust and get different perspectives, if you can do that with where we are right now, at least to me, it was help take away some of that, like the doom and gloom of certain things where Do I wish things were different? Of course. There's a lot of stuff I'd change if I were playing God for a day, or maybe I shouldn't say that. I'm assuming God has it covered, and I'm just some dude talking about silver. Yet there's what we can control and what we can. And in terms of the stuff we can't control, it's there. And I think maybe the I find the nice balance is that there if you know how to handle that emotionally and not to ignore it, because sometimes we find ourselves in a situation where it is your turn to stand up and do something, and I hope that I show up in those occasions. Yet putting that aside, like with the stuff we can't control, when you look at what we can, I would say that for anyone who's felt frustrated with gold or silver for years, hopefully you're in a little better mood over the last couple of months. Maybe, hopefully by the time you hear this, feeling better than on last Friday. But I mean, I think all that stuff that you went through and learned in those times where your portfolio got smashed and you wanted to react to it.
Well, I was called. I'm sure you were the same way, Chris. I mean, I was called a bunch of names, like why you still buy saying anything nice about gold or silver? Why did you buy shares of this gold miner or silver miner royalty company? Like I was getting called like all types of names over the years. But I just kept accumulating for that part of my investment retirement account, and now things are looking good. I have a 10x on some of my gold stocks. So.
Jason, you had a simple, not easy, but a simple formula where you're a smart guy to begin with. You have a desire to learn. You're talking to accomplished, talented people. I know you're smarter than most of the finance people out there, but I see you bring it people that you're learning from. If you're keeping a mind and your intention is to be making good decisions, and when you give out advice, give out good advice rather than being committed to defending a position or being able to say, I am right with everything I say. I mean, when you follow that, you have that's a good formula. There's some days maybe it doesn't seem like a good formula, but over the longer term, I've
Well,
tried the
value
alternative.
investors are rare nowadays, Chris. I mean, like, especially because of all the liquidity floating around the money printing. But then, like, for gold and silver companies were undervalued for 15 years. No, I think it was 17 years that they underperformed the S&P 5. So they were undervalued for 17 years, a lot of them. Now, obviously, like Franco-Nevada, Wheaton Precious Metals, which was, I have owned Wheaton Precious Metals for over a decade. So I was buying shares at $15. But some of these other gold and silver miners, I mean, they were undervalued for over 15 years. It's a long time. But they finally caught up. The market's re-rating, and now because I think that it's a sweet spot here because of the macro. But then you add in all these new technologies, and what people are finally figuring out is all of these new technologies that people are talking about: data centers, AI, robots, electric vehicles. We need a lot of energy and power and a lot of raw materials. So I think it's kind of like a sweet spot now. We're in kind of the perfect storm where you have good macro conditions for gold and silver, and now you have good industry growth for all these technologies. They need an absolutely insane amount of energy and raw materials for the new technologies.
Yeah, it's funny. I was thinking even when we're starting today, I'm like, wow, I got to revisit some of your. I know you've studied energy in a lot of these companies, and I think all of that. I mean, I'm newer to my studies of the energy market, although it's like I keep reading these things the EIA puts out and the data centers and the stuff AI needs, let alone the reshoring manufacturing. I mean, we A, don't have the people, and B, yes, so I mean, I think all these things you've been studying and sharing with your audience are going to be more relevant than ever. And maybe the nice part is that I've noticed finally seeing silver move. It's like restored my faith in like, okay, well, when supply and demand is wildly out of balance, okay, it does finally matter. Maybe it takes a while. Yeah, Jason, here's a fun one for you to look up. If you look at the cocoa chart, which hit its own supply disruption 2 or 3 years ago, cocoa had basically been trading about $2,500 a contract for the last 50 years, and then it spiked up to 12,500. You drop those two zeros, you have exactly what just happened in the silver market.
Yeah, but cocoa can go bad though. I mean, silver is a
Right.
lot easier to
It's
copper
not
and silver.
the
Yeah, a lot. It's not apples to apples. Silver's a lot
it's
easier to store.
it's not exactly the same, but still the concept that, if you see something where supply and demand imbalance is off, and then you sit there for a couple of years and start to question yourself. Again, I think this is for
But
my own
but but on the other
mindset.
hand,
It's
though,
been
Chris, so you brought up the cocoa spike there, and we have had some of these gap ups in the commodities with nickel and cocoa, like you said. I think coffee had a spike in the last like couple years too. But a lot of that silver on the supply side, I mean, it's in a landfill. It's in a landfill. It's in a junkyard. It's in the ocean. It was plastic packaging or something like that. So it's not going to be recycled very easily. It's in tiny little trace amounts. It's going to be super expensive, super energy intensive, very difficult to recycle this stuff too.
yeah. I mean, I'm sure their recycling will increase with the higher price. There's some that takes place now, but I don't think that, it's like $100 silver. All of a sudden, you're going to get an extra, 200 million ounces of silver, let alone 50 million ounces added to the supply from recycling. So
Well,
it's an
eventually
incredible
that there might be
time.
a business opportunity. So, like maybe 5 or 10 years from now, I've seen some presentations that there's the technology to do it, but it would take years. So we need to start putting the capital in and doing that. So I think there's business at some point, Chris. I mean,
There are
the
people
org.
who are doing it now. I remember in the past year, maybe about a year ago, watched some video and they're showing some guy. He's got all of his equipment. I mean, it's not like just go rent a U-Haul and fill up from the landfill. It's more complex than that. I mean, I would say this: if someone was listening and thinking like, "Oh, I really want to do that," especially at today's silver price, I mean, you could probably make a good living doing that. It's not the easiest work to sort through and do, but so, I mean, if someone were looking for a business opportunity, I'd say yes, that's viable. Although, if they're saying like we're going to recycle an additional, not what total, but an additional 50 or 100 million ounces, no, I don't think that's happening.
Yeah, it's going to take many years. And at some point, though, I mean, the ore grades for silver are falling so fast. Every 5 to 7 years, the ore grades fall enormously for silver. At some point, Chris, the ore grades are going to be higher in a junkyard or a landfill or at the bottom of the ocean than mining. That's how bad it's getting for the silver ore grades. We're moving like 2,000 pounds a ton of uneconomic rock to get maybe 100 grams per ton of silver. It used to be 300 or 400 grams per ton was the average when you and me started covering gold and silver many years ago. The average deposit was like 200 to 400 grams per ton silver. Now that's a super high grade deposit where maybe 100 grams per ton. It's falling very, very rapidly. That's another thing the average person doesn't understand.
And you've already seen, we got the guys, saw one the other day. Some guy saying he's like, well, there's no problem. This is a bubble because we got the equipment. We can go mine asteroids and everything. And I'm
Yeah,
like,
eventually,
okay.
maybe in my lifetime, maybe.
I mean, now
Maybe.
here's the thing. If you want to tell me we have the equipment to go mine an asteroid, hey, what do I know? Maybe you're right, but someone let me know what the all-in sustaining cost is on that one. It's not. I don't think it's going to be 100 or
What is the
anywhere
government
close
going to
to
print
it.
trillions of dollars and just lie about it then? Are they going to do that to subsidize something?
Well, now that on the other hand, you couldn't rule out. I mean, maybe Besson will come out tomorrow and say, "Hey, we realize we're really fucked with this critical mineral thing. We're going after some asteroids. Kevin, go print it up to fund it." I mean,
Well, isn't that what Greenland? Isn't that why they were talking about Greenland and why they
that's
went to
what I
Venezuela?
hear.
So I thought they're going for the easy targets. So as a libertarian, I'm not in favor of any of this, but I think that's why, like, the Pentagon, the military-industrial complex is looking at, Greenland and Venezuela and Iran. They're looking at the easy targets for oil and mining first.
They're telling you that they're concerned about this. They're not really trying to hide the signs. I mean, they reeled out. I saw JD Vance talking about it, then Lutnick, Trump. You had Jason. Did you see Robert Friedland was in the Oval Office a couple days ago?
No, I did not. I actually speak to him in emails. I didn't know he was in town. I was supposed to have lunch with him last time he was in town.
I'll make a note here. I'll send you the clip of that. I mean, it's like we're hearing this stuff, and it's like, oh, well, government says a lot of stuff. And then last night I'm flipping through Twitter, and there's like he's shaking hands. He's leading the conversation. Even Trump's sitting there looking at him because he's explaining. He's like, yep, and these minerals, and here's the problem with this, and that. I mean, he's in the Oval Office, so that's why again. Yeah, when you see silver
Well,
go
he's Mr.
from
Copper. Yeah, he has another company. I saw a presentation. He has an iPulse company. It's going to be for, not only for mining for drilling, but for hyperloops. But that's a small little startup he's been working on for a while.
well, it looks like he's got a little backing in case he needed additional capital because, again, it's not just you and I talking about it. Now we're seeing it doesn't even matter what the governments talk about because you probably don't want to pay too much attention to what they say, but you see them doing it. And that's the big difference. In 2011 and 1980, you didn't have what's happening here. Now, does that mean we can't wake up next Friday? And I would suggest for people, it'd be reckless to not expect extreme volatility in both directions. But with that said, like
Well,
when you
yeah,
look
look at
at
silver in the
the
last last 10 days. I mean, it's been a roller coaster.
I find the thing that's most helpful for me that and I actually in my column this week I wrote about this where I remember back in the day, when I left Wall Street, everything was gold, silver, mining stocks or options on mining stocks, which I'm not saying is a recommended way to live life yet. It's like we're in a different environment now where you see these things happening now and you don't have I don't have the first clue what's going to happen in tomorrow's pricing. Will we see another day where it goes down, silver goes down $30? I would bet that we do. Hopefully it'll be after a bit more
Yeah,
rallying so we won't be back at 50 and I don't necessarily think that's going to happen, but I think you're going to see extreme volatility. Remember that the people who are piling into the market now know less than you do. I'm saying this to not just Jason, but everyone listening at home. They're piling in, reading, oh, well, this guy said it's a bubble. This guy says it's going to 400. You have an informational advantage. All of the time and effort you put in over these past months, years, or decades, now is when it's really going to serve you. And hopefully, if you've been invested, you have a little extra capital that you can really use to your advantage now. But I mean, we can like it or not, but yeah, there's going to be people popping out of left field saying they know everything. Although I would just say
well,
that
they've been denying all the stuff that you're saying that there is no industrial end users contacting miners. I mean, I hear this every day, Chris, and then I watch your interviews that you and Vince are doing with the mining company CEO saying, "Yeah, these industrial end users contacted me." Uh, it's just shocking. I guess these
people
people with large.
say, Jason, I pointed out one of I made because everyone's getting excited about the Asian AI guy, and look, I'm not trying to rain on anyone's parade, but I saw several things that to me were directly manipulative and based on false announcements that didn't occur. So I made a short video where it's like, hey, this is like people are saying, well, why are you saying that, Chris? I'm like, all right, here you go. He put out a video back in December saying the CFTC held an emergency meeting on December 16th, and the following Monday, COMEX trading was going to stop, and then the dealers were going to shut down. And last I checked, that didn't happen. That press release also doesn't exist on their website. Yet when I shared some of that, I'm getting like people telling me to F off and like, oh, you're just jealous. It's like, okay, fine. Then, and Jace, but that's the thing. I think the real skill is, okay, lots of people say lots of stuff. I mean, if some guy was running naked down the street barking like a dog and says, I don't like you, you're probably not going to care. You're like, oh, he's on his own path there. And so that's what I would say again to everyone listening,
Yeah, I'd say
where,
he's probably a paid protester. No.
but I mean, everyone, for however long you've been listening to Jason's show or other shows like that, implore you to just remember to be
Be
you've done a
careful who
good
you
job
trust your
of
information from. Yeah, and don't trust any one person, probably.
trust your own information and your own research because most of the people listening to your show, Jason, have been listening to stuff like this for years or a decade or more. And I just would say to remember that you already know more than most of the people who are going to pile into the market and say what they think is exactly going to happen. And it's good to be able to hear that, yet filter it out. And Jason, I thank you again for having me on here. It's fun thinking back about whenever was the last time we did this, and I think you've really done a great service for your audience. You've done a great service for me. Before I had a show, I was listening and learning from you, and I think now people have already been able to benefit from that, and it's going to be even more beneficial in this time period we're going into.
Yeah, it's going to be wild. All the stuff back and forth with the U.S. We're in a Cold War, so I see people predicting, an actual physical war, kinetic war. I think it's a Cold War. So I think it's a technology arms race. It's a Cold War. Obviously, both the U.S. and China are trying to stockpile what key amounts of energy, key amounts of raw materials. I do not see that changing. The U.S. was way behind China in this regard. The policies that the U.S. had established with ESG, banning mining. A lot of the banks wouldn't even fund mining. You know this, Chris, because you cover a lot of the mine companies. There were miners out there that had good projects and they couldn't get any financing for years. The banks wouldn't give them any money. A royalty and streaming company might have given them some capital to do some drilling. They could not raise the capital to go and build a mine. I think we're in a different environment now where there is some capital available. The problem is some of these mines could take years to come online. You're in countries like Mexico, they're already like we're talking about what delaying or making it way more difficult for a new open pit mine. That's not going to help supply for copper, silver, or some of the other key base metals.
Yeah, I mean, again, there's parts of it that aren't so ideal, yet I think the best thing we can do, I don't know if everyone maybe will or won't get the same feeling I have of like, wow, this is an incredible opportunity. Maybe you feel that. Hopefully you do. And I think that people who are listening to your channel, Jason, are in that position where they do have the knowledge to use this to their advantage or just protect what you have and keep it safe. And then the last thing is just hopefully at some point take a step back and appreciate that, if you're listening to shows like this, I'm assuming you find financial markets interesting and it's like we're living through history. So, like if you want to be, we got the Super Bowl coming up in a couple of days. I mean, you don't want to get to the end of the game sitting on the sidelines. You got to get some scrapes and get out there. So I would say try and find. I think that's one of my favorite things I've been able to pull off is really step back and just enjoy and appreciate this, and just remember that to some degree it's a number on a screen, and maybe it's not as straightforward with that, but
Unless you have the
also.
metal, yeah. Unless you have some physical gold or silver,
Yeah,
yeah.
but
Then it's
like, let's say your portfolio is 2 million and it goes up to 2.1 million or it goes down to 1.8 million. If it's not affecting what you're doing that day and you're still healthy and you have your family around you and you give them a hug, yeah, you're happy. You obviously want it to grow, but that's something that I had to learn and I think is common, if I may say so, for silver investors where it's like it's great the stuff that happens, but putting it in the right emotional context so that when you have a day where you wake up and the price is down 30% like we had last Friday, that's not putting you, it's not destroying your day or
well, they
leave
should
or
expect more of that, right? Because there's been wild swings not only in silver, but I think the gold price, it's been moving $100 or more per day now for a while. There was a $300 or something move a couple days ago, so the gold price has just been having some very violent swings lately too.
yeah, and I think we're going to see swings in a lot of markets. I would say absolutely. If you're not prepared for that, then you might want to think about adjusting your position size. But again, it's like if we accept what is and you plan appropriately around that, Here's the thing, Jason, I know you've studied a lot of great traders. There's not all the guys who have done really well are considered the legends. I don't know if there's many of them that, they made one huge bet, got it in at the exact bottom, sold out the exact top, and then sat there drinking daiquiris on a beach for the rest of their life. That's not generally how it happens, but day in, day out, you see where percentages are in your favor. When there's a really good opportunity, you be more aggressive there. I think it's an incredible time where money management is going to be incredibly important, and also just having this stuff in context. So if you wake up and silver's down 30% again, you're not making decisions when you're in panic mode is also pretty darn important. So
Exactly, well said. So yes, and I think you're starting to see that now because what the old 60/40, which is modern portfolio theory, that Wall Street, Wall Street and academia were
even Wall
promoting
Street's
this.
putting a 20% slice in. They're telling you. Did you
Yes.
see the articles? They're staffing up the bullion desk. So now I'm not. I
Well,
don't think that the banks know exactly what is going to happen to the price.
I think
But
this
the
is
fact
about
that
that the
they're
one asset class that worries me the most, Chris, are these government bonds, whether it's the Japanese government bonds, the US Treasuries, Europe, Chinese government bonds. It seems like they're all doing the same stupid stuff with the currency creation, monetizing government debt, trying to cap interest rate yields, so some type of financial repression or yield curve control. And then we're back to what the 1940s or 1970s, what that's financial repression, yield curve control, and then government bonds back then were considered toxic or radioactive certificates of confiscation. No one wanted government bonds in any government in those
they
time
still
periods.
had at least a positive real rate of return back then, whereas now, I mean, there's awful lot of money sitting around the globe in negative real yield bonds. And that's going to have to go somewhere. And I think, again, you don't have to take my opinion for it, but the governments are telling you where they're directing some of that money. And I think the rest people are piecing together. It's kind of one of those mental things. It's hard to believe when it's happening. And again, what happens over the next month or two, who the heck knows? Although I would say, one thing I found really helpful, especially on these big moves down, is that, all right, you see like, whoa, my biggest holding just got whacked 10%. That stings a little bit, yet I keep going back to, I find when I think, all right, is it possible to me that with all the reshoring and all the everything else we talked about, that 10 years from now, gold and silver are lower? I would suggest for people start with that question. I find, and it doesn't mean that that's all you're investing for, but start there. Think about that. I'm a big fan of writing things out by hand as well. I find does
Yeah,
powerful things with our
I don't want to
mind.
think about what the national debt will be and all the wasted funds will be 10 years from now. It's not going to be pretty.
But start with
Both
when you're
political
not
parties.
sure
I don't
what.
trust either of them at this point. The amount of spending, the recklessness, the
Right.
corruption and the waste and the fraud, the reckless. I don't trust either political party at this. They're all liars and scumbags.
But it's like when you start with that question, whether that's the ultimate question or not, going through that thought process then makes a lot of the other decisions a lot easier, I find. So hopefully that could be something that might be helpful to some people.
Well, Chris, I want to thank you so much. We've talked for about 2 hours. I think we could talk for another 2 hours. We'll have to
This
have
was
you back
fun,
on
man. I
again.
had a good time. I thank you for this.
We'll have to have you back on again. I mean, you're the one interviewing the silver miners there that got contacted, and then everyone is not. They're not citing your research. I saw your interview cited in one mainstream. I think Market Watch or something, or CNBC cited one of your interviews, and everyone's talking.
CNBC was watching that Sunday night show with David Stein too, because again, that was right after silver had almost gone through 80 after Christmas. So they were watching, and he told me they called him the next day for a comment. And I'll try not to be too much of a smart ass, although I had to giggle a little bit. I'm like, when CNBC needs to figure out what's going on, where do they turn now?
Well, they
So.
banned Peter Schiff and Michael Pinto like 10 years ago because they got in a huge argument with Erin Burnett online. She doesn't even work there anymore, but I guess they're still banned because they haven't been back on since. So it's ridiculous. What CNBC meanwhile is pumping crypto nonstop. So
Well, hopefully they'll come to their senses and hire you one of these days soon, so it'd be worth
I don't
watching
want to be a
again. But
journalist. I want to be a hedge fund manager or get my financial technology, educational technology company funded, fintech or edtech. I didn't want to be a journalist. Journalists don't make much money, man.
well, Jason, I'm excited for you with all the things you've accomplished in the time we've known each other, and I have a feeling if that's whatever you want to do, that you're closer to accomplishing that than ever, and I'll be excited to watch your success. And again, I just thank you for having me on here, and hopefully this was helpful for people.